Hi, I'm Kristen King from the Investing Channel, and you're watching Pink Diamond, the show where we help you find the diamonds in the rough of the pink sheet and small cap market. This week, we're venturing back into the fast-moving world of retailing, an industry that has undergone profound changes over the last 18 months thanks to COVID-19 and the economic lockdowns it created. Existing trends within the industry were accelerated. Bricks and mortar retailing came under extreme pressure as consumers stayed home and shopped online rather than in physical stores. Some brands thrived in the new environment while others folded. The stock we're looking at this week is one we've looked at before, back in December 2020, in fact. It's a small fish in a very big pond, but it's a highly colorful one, and the name of the stock is Bebe Stores. Let's remind ourselves about the company's story. Bebe Stores sprang into life in 1998 and now has more than 70 stores worldwide alongside a well-established online portal, Bebe.com. Bebe's original target market was the fashionable young woman about town who appreciates bold contemporary design and colors. Bebe's founder and CEO Manny Mashouf opened his first boutique in San Francisco back in 1976 and has used his expertise and experience to develop a fashion label that embodies a modern, sophisticated style at an affordable price point. Bebe expanded outside of clothing and fashion retail with the acquisition of 47 Buddy's home furnishing franchises. Buddy's is a specialist rent-to-own retailer that allows its customers to spread the cost of their purchases over a number of weekly payments. Buddy's sells furniture, electronics, and appliances. Bebe Stores spent $35 million on the purchase, and Bebe also bought the rights to add additional franchises in the southeastern United States. It issued new stock to fund that deal, selling 1.5 million shares to investment bank B.Riley Financial, who also helped organize a $22 million loan for the company. Bebe Stores is OTC listed with a market cap of $112 million, so it's a real minnow and one that until recently has been flying under the radar. Whilst many small and indeed large retailers have struggled in the current financial climate, Bebe has thrived. For example, it declared quarterly dividends in December, February, May, and August. The three priorly payments were 6 cents per share. However, the August payout was increased by more than 150% to 15 cents. The company has also been reorganizing its finances and have recently announced a new 5-year secured loan of $25 million with an additional drawdown facility on a further $10 million. Some of the new debt facility will be used to pay down its existing loans. However, the balance will help to fund further expansion, and Bebe has exercised its rights to purchase a further 8 Buddy's home furnishing franchises located in Kentucky and Indiana. Those new stores will complement its existing footprint, and they will be able to leverage off of the existing infrastructure and back office facilities within the Bebe Stores group. Buy Now, Pay Later, or BNPL as it's known, has become one of the most popular ways to shop during the pandemic, with service providers such as Affirm and Klarna achieving multi-billion-dollar valuations as a result. Just last week, Affirm reported Q4 earnings that blew past Wall Street's expectations. The stock, which had recently jumped by 30%, having secured a deal with Amazon, leapt by another 22% on the news. Of course, that's all happening at a far bigger scale than Bebe Stores operates at, but nonetheless, the ability to spread payments for retail purchases is very much on trend as far as investors are concerned. That's been reflected in Bebe Stores' share price performance, and over the last month, the stock is up 57.66%, and in the last week, the shares have risen by almost 9%, taking the stock's 52-week gains to 118.75%. Unsurprisingly, Bebe Stores has attracted attention among institutional investors, and Trackstar IQ, our proprietary search tracking database, has identified 417 ticker searches in recent weeks. Those searches were made by 284 individual institutional investors. That's a lot of busy people taking time out of their day to research a $112 million company. As often is the case with small and microcap stocks, a lot will depend on the execution and Bebe's ability to integrate the new Buddy's locations quickly and efficiently. Much will also depend on the continuing recovery of the U.S. economy and consumers' readiness to continue to spend money. People have been happy to invest in their home during the pandemic, and the flexible payment terms offered by Buddy's should allow them to benefit from that trend. As such, the stock should go back on our watch list, if nothing else. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar. Small and microcap stocks can be high-risk investments, so before you make any decisions, please ensure you do your own due diligence.